There's something you do when you trade that you won't admit to anyone. Maybe you've done it today. Maybe you'll do it tomorrow. You know exactly what I'm talking about. That moment when your hand hovers over the mouse, your stop loss is right there on the screen, and you move it. Just a little bit, just to give the trade more room. And in that split second, everything you know about trading disappears, and something else takes control. Stay with me, because by the end of this, you'll understand exactly what that something is and why it's been destroying your account without you even realizing it. Most traders think they have a strategy problem. They don't. They think they need more indicators, better signals, a different time frame. They don't. What they have is something far more dangerous, and I'm going to show you exactly what it is. But first, let me ask you something. How many times have you told yourself you'd follow your plan perfectly, only to break your own rules within the first hour of trading? If that number is higher than 0, keep listening, because what I'm about to explain isn't taught in any trading course. But it's the only thing that actually separates profitable traders from those who keep leading their accounts. Here's what really happens. You start your day with conviction. Today will be different. You've learned your lesson. You've seen what happens when you don't follow the plan. You're disciplined now. You're ready. And then the market opens. Price starts moving. You see a setup. Not quite your setup, but close. Close enough. And that voice in your head starts, "This could be the one. Everyone else is getting in. You're going to miss it. You'll regret this." And before you even realize what's happening, you're in the trade. Not because it met your criteria, but because something inside you couldn't tolerate sitting in cash while the market moved. And here's the part that nobody talks about. Sometimes that trade wins. And when it does, everything gets worse. Because now you've learned something lethal. You've learned that your impulsive decision worked out. That your gut instinct might actually be better than your strategy. That maybe all those rules are too rigid, too limiting. So the next time you're in that moment, you'll remember. You'll remember that breaking the rule worked before, and you'll do it again. Except this time, you won't be lucky. This time, the market will take everything you made on that impulse trade, plus more. And now, you're not just back where you started. You're behind. And you're emotional. This is the loop. And every trader who struggles is trapped in it. They win with bad behavior, which reinforces bad behavior. They lose with good behavior because their sample size is too small, which makes them doubt good behavior. And they spend months, sometimes years, oscillating between these two states, never understanding that the problem isn't the market. It's not their strategy. It's not their timing. The problem is that they're trying to trade with a mind that was never designed for this kind of decision-making. Let me explain what I mean. Your brain evolved to keep you alive in an environment where patterns were reliable. See smoke, expect fire. Hear rustling in the bushes, prepare for danger. These patterns saved your ancestors' lives. But the market doesn't work like that. The market is based on odds and uncertainty. The same setup can win 10 times and lose 10 times in a row. There's no reliable pattern in the way your brain expects patterns to exist. And so your mind, desperate to make sense of randomness, starts inventing patterns that aren't there. It sees 3 winners in a row and expects a 4th. It sees 2 losses and assumes you've lost your edge. Neither is true, but your brain can't help itself. It's doing what it was designed to do, and that design is incompatible with profitable trading. Now, add money to this equation. Not just money, but money that represents your effort, your time, your hope for a different future. Every dollar in your account carries psychological weight. When that number goes up, it validates you. When it goes down, it threatens your sense of competence, your identity as someone who's smart enough to do this. And suddenly, you're not making decisions based on probability or strategy. You're making decisions based on how you feel about yourself. You take profits early because you can't risk feeling stupid for giving back gains. You hold losses too long because realizing the loss means admitting you were wrong. And admitting you were wrong feels like admitting you're not good enough. But here's what you need to understand right now. The traders who make it to the other side, the ones who actually build consistent profitability, they feel all the same things you do. The same fear, the same greed, the same impatience, the same doubt. The difference is not that they've eliminated these feelings. The difference is they've learned to feel them and not act on them. And I'm going to show you how they do that. But first, you need to understand why this is so hard in the first place. When you're in a trade that's going against you, your brain enters a state of emergency, not a small emergency, a survival-level emergency. Because to your primitive brain, losing money is equivalent to losing resources that could keep you alive. It doesn't matter that you're not actually in danger. Your survival instinct doesn't know the difference between a predator and a red candle. It just knows something is threatening your resources, and it floods your system with stress hormones. And in this state, you cannot think clearly. You cannot access the rational part of your brain that knows you should take the loss. All you can access is the part that says, do something, anything, to make this feeling stop. And that's why you move your stop loss. That's why you add 2 losers. That's why you close winners too early and hold losers too long. Not because you're undisciplined, not because you're weak, but because you're human and your human brain is working exactly as designed. It's just designed for a different kind of threat. And until you understand this, until you see that your decisions are being driven by neurobiology, not logic, you'll keep repeating the same patterns and wondering why you can't seem to change. So, let's talk about what actually needs to change. Not your strategy, not your technical analysis. What needs to change is your relationship with discomfort. Because every good decision in trading requires you to tolerate discomfort. Sitting in cash while the market moves feels uncomfortable. Taking a loss feels uncomfortable. Letting a winner run past your comfort zone feels uncomfortable. Waiting for your exact setup when close enough setups keep appearing feels uncomfortable. And if your primary goal is to avoid discomfort, you will make every wrong decision that exists in trading. The traders who succeed have learned something that sounds simple but is incredibly difficult to implement. They've learned to use discomfort as a signal rather than a problem to solve. When they feel the urge to do something impulsive, they pause. Not because they have superhuman willpower, but because they've trained themselves to recognize that urge as important information. It's their mind trying to protect them from uncertainty. And once you can see it that way, once you can observe the urge without being controlled by it, everything changes. But here's where most traders get stuck. They think awareness is enough. They think understanding the psychology means they should be able to execute perfectly now. And when they can't, when they still break their rules despite knowing better, they beat themselves up. They think something is wrong with them. They think they lack discipline or mental toughness. But that's not how behavior change works. Knowing what you should do and being able to do it consistently are 2 completely different things, and the gap between them is filled with practice. Think about learning any skill. When you first learned to drive, you had to consciously think about every action. Check mirror, signal, shoulder check, turn. It was exhausting. You couldn't have a conversation while driving because all your mental resources were dedicated to the mechanics. But over time, with repetition, it became automatic. Right now, following your plan requires enormous conscious effort. You have to fight against your impulses. You have to remind yourself of your rules. You have to force yourself to wait, to take losses, to stick with the process. It feels like swimming upstream. But with repetition, with catching yourself about to break a rule and choosing differently hundreds of times, it starts to become automatic. Not easy, not effortless, but automatic. Following the plan becomes the default, and breaking it requires conscious effort. That's when trading changes. That's when consistency becomes possible. But getting there requires something most traders aren't willing to do. It requires you to fail. A lot. Not just fail at trades, but fail at following your own process. And instead of seeing that failure as evidence that you can't do this, you have to see it as data. What triggered that deviation? What were you feeling right before you broke the rule? What story were you telling yourself that made breaking the rule seem reasonable? These questions are more valuable than any chart pattern you'll ever learn. Because once you understand your triggers, once you see your patterns of self-sabotage clearly, you can start to interrupt them. And here's something that will change how you think about this entire process. The traders who are making real money, the ones who've gone from small accounts to managing significant capital, they still have these moments. They still feel the impulse to break their rules. They still have trades that make them uncomfortable. They still doubt themselves sometimes. The difference is, they've built a system that catches them before they act on these impulses. They've created checkpoints, pause points, moments where they step back and ask themselves if what they're about to do aligns with their process or their emotion. Let me give you a concrete example. A trader I know, someone who's been consistently profitable for years, still gets the urge to revenge trade after a loss. Still feels that anger, that need to get the money back immediately. But he's built a rule. After any loss, he closes his platform for 10 minutes. Doesn't matter how he feels, doesn't matter what the market is doing. 10 minutes, no exceptions. And in those 10 minutes, the emotional intensity fades. Not completely, but enough that when he comes back, he can evaluate the next setup objectively rather than desperately. That simple rule has saved him tens of thousands of dollars. Not because it's sophisticated, but because it interrupts the pattern before it can play out. This is what you need to understand. You don't need to become a different person. You don't need to eliminate your emotions or become some kind of robot trader. You need to build a system that works with your psychology, not against it. You need to create structures that make it harder to do the wrong thing and easier to do the right thing. And you need to accept that you will still fail sometimes, and that's not a problem to solve. It's part of the process. Now, let's talk about something that destroys more traders than bad strategy ever. Good overconfidence. You have a winning streak. 3 trades, 5 trades, maybe a whole week of wins. And something shifts. You start to feel like you've figured it out. And in this state, you start taking liberties. You increase position size. You take setups outside your criteria. You hold trades longer than planned. And for a while, the market might reward this. But you're not trading your edge anymore. You're trading your emotion. And eventually, the market corrects you. The correction comes hard. One large loss or a series of losses that wipe out weeks of gains. And now you're terrified. You can't take your next setup even when it's perfect. Both states, overconfidence and fear, are equally dangerous. Both destroy consistency. And most traders spend their entire careers swinging between these two extremes, never finding the middle ground where actual trading happens. That middle ground is called equanimity, the ability to experience wins and losses without dramatic emotional swings. To execute your process the same way after 3 losses as you do after 3 wins. This sounds simple, but it's the hardest thing you'll ever develop as a trader, because your mind wants to make every result mean something about you. A win means you're smart. A loss means you're not good enough. None of these stories are true, but they feel true. And feelings, when left unexamined, drive behavior. So how do you develop equanimity? By measuring yourself on what you can control. Did you wait for your setup? Did you manage your risk properly? Did you follow your exit plan? If yes, then you traded well regardless of outcome. This shift changes everything. If winning makes you feel successful and losing makes you feel like a failure, you'll never execute consistently. But if following your process makes you feel successful, then you can focus on execution quality. And execution quality, over time, leads to profitability. But let's be honest about something. Everything I've just told you makes sense intellectually. You're nodding along, recognizing yourself in these patterns. But when you close this video and open your trading platform tomorrow, there's a very real chance you'll break your rules again. You'll feel that impulse, that urgency, that discomfort, and you'll act on it. And then you'll feel frustrated with yourself because you knew better. You understood all of this, and you still couldn't execute. And this is the moment where most traders give up. They think understanding should equal execution. They think awareness should translate immediately into different behavior. And when it doesn't, they conclude they're not capable. But that's not what's happening. You're trying to override years of conditioning with a few days of new information. What works is creating a practice, a daily practice of noticing your patterns and choosing differently. Here's what that practice looks like. Before you trade, sit for 2 minutes in silence. Ask yourself one question. What state am I in right now? Am I calm? Agitated? Disparate? Overconfident? Just notice. Don't judge. Because if you know your state, you can adjust. If you're agitated, trade smaller. If you're overconfident, review your recent losses. If you're desperate, don't trade today. This simple check-in will save you more money than any indicator ever could. After you trade, journal not just what trades you took, but how you felt, what you were thinking when you deviated from your plan. Over time, patterns will emerge. You'll see that you always break your rules after certain types of losses, or on certain days, or when your account is at certain levels. Once you see them, you can prepare for them. You can interrupt the pattern before it plays out. This is the real work of trading. Not studying charts, but studying yourself with the same intensity you study the market. The market doesn't need to change for you to succeed. You need to change. And that change happens slowly, through repetition, through failure, through getting back up with slightly more awareness each time. Even when you get good at this, you'll still have hard days. You'll still feel fear and greed and impatience. But those feelings won't control you anymore. You'll notice them, acknowledge them, and execute your plan anyway. Not because you're more disciplined, but because you've built a system that doesn't require you to be superhuman. Just consistent. So here's where we are. You now understand that your struggle isn't about knowledge or strategy. It's about the gap between knowing what to do and doing it under pressure. You understand that your brain is working against you in ways you can't eliminate, only manage. You understand that every successful trader went through exactly what you're going through and came out the other side, not by finding a better system, but by developing a better relationship with themselves. The question is not whether this is true. The question is what you're going to do about it. Tomorrow, the market opens again. You'll see setups. Some will meet your criteria, most won't. You'll feel impulses to force trades, to move stops to close winners early, to hold losers too long. And in those moments, you have a choice. You can act on the impulse like you always have. Or you can pause. Create space between the feeling and the action. Ask yourself if what you're about to do serves your long-term goals or your short-term discomfort, and choose accordingly. You won't do this perfectly. You'll fail more than you succeed at first. But every time you catch yourself, every time you choose process over impulse, you're building something. Not just a trading account, but a version of yourself that can handle pressure, that can execute under uncertainty, that can be trusted with their own capital. And that version of you, built slowly through repeated choice, is worth more than any trade will ever be. This is not motivational. This is mechanical. You build the skill of self-regulation the same way you build any skill. Through practice, through failure, through repetition. And if you commit to that practice, if you show up every day and do the work even when you don't feel like it, something shifts. Not overnight, not in a week, but over months, you'll notice you're breaking fewer rules, taking cleaner trades, handling losses better, letting winners run longer. Not because you've found a secret, but because you've become someone different, someone who can do this. That's what's on the other side of this work. Not guaranteed wealth, not endless winning, but the capacity to engage with the market on your terms, with your eyes open, executing your process regardless of how you feel. And if you can do that, if you can build that consistency, profitability becomes inevitable. Not because the market rewards you, but because you've finally stopped sabotaging yourself. And for most traders, that's the only edge they'll ever need. The difference between where you are and where you want to be isn't knowledge. It's execution. And execution starts with the next decision you make. If this connected with you, subscribe and turn on notifications so you don't miss what's coming next. See you there.